Kevin O'Leary recently warned that if you are over 50 and you make this one mistake, 2026 could completely destroy your retirement. And the scary part is this. Almost 90% of people are already making it without realizing it. Imagine working your entire life, saving for decades, planning your retirement carefully, and then watching everything slowly fall apart, right when you need stability the most. This is not fear-mongering. This is reality. Markets are changing. Interest rates are unpredictable. Inflation is silently eating purchasing power. And retirees are standing right in the middle of this financial storm. Today, I'm going to break down exactly what Kevin O'Leary is warning about, why this mistake is so dangerous after 50, and how you can protect yourself before 2026 arrives. If you are serious about protecting your future, you need to hear this until the end. Before we continue, make sure you like this video and subscribe to the channel. This is Wealth Playbook, where we break down real money strategies for people who want to protect their capital, grow wisely, and avoid costly mistakes later in life. Subscribing now could literally save you from financial stress in the years ahead. Now let's talk about the mistake. Kevin O'Leary has repeatedly said that the biggest danger for people over 50 is staying fully exposed to market risk while assuming that everything will work out. Many retirees believe that because markets recovered in the past, they will always recover in time for them. But here's the truth. Most people don't want to hear. Time is your enemy after 50, not your friend. When you are 30, a market crash is painful but manageable. When you are 60 or 65, a major drawdown can permanently destroy your lifestyle. Kevin O'Leary calls this the illusion of safety. People think diversification alone will protect them. They think owning mutual funds, index funds, and a few dividend stocks is enough. But what they ignore is sequence of returns risk. This means if the market crashes early in your retirement years, you are forced to withdraw money at the worst possible time. Even if markets recover later, your portfolio may never recover fully because the money you pulled out is gone forever. Think about this scenario. You retire at 62 with a $1 million portfolio. The market drops 30% in the next 2 years. At the same time, you still need to withdraw money to pay for living expenses, healthcare, and inflation-adjusted costs. That $1 million becomes $700,000. Then withdrawals reduce it further. Even if the market rebounds later, you're now compounding from a much smaller base. This is how retirees quietly go broke without ever making a bad investment. Kevin O'Leary warns that too many people over 50 are chasing growth instead of protecting capital. They are still investing like they are 35 years old. They are overexposed to volatile assets, hoping for higher returns, while ignoring downside protection. This is not investing. This is gambling with your retirement. Another critical issue Kevin highlights is inflation risk. Many retirees think inflation is temporary. They think prices will stabilize and everything will go back to normal. But inflation doesn't need to be extreme to be dangerous. Even 3 to 4% inflation can cut your purchasing power in half over retirement. Fixed income that doesn't adjust for inflation slowly strangles your lifestyle. What feels comfortable today can feel extremely tight 10 years from now. Kevin O'Leary also points out that retirees underestimate how long they will live. Medical advancements mean many people will live well into their 80s or even 90s. That means your money doesn't need to last 10 or 15 years. It needs to last 25 or 30 years. A small mistake today becomes a massive problem later. This brings us to the most dangerous behavior of all. Emotional investing. When markets fall, retirees panic. They sell at the bottom to stop the bleeding. When markets rise again, they hesitate to get back in because fear remains. This emotional cycle destroys wealth faster than any single market crash. Kevin O'Leary constantly emphasizes discipline over emotion. If you don't have a plan that removes emotion from decision-making, you will eventually sabotage yourself. At Wealth Playbook, we see this pattern over and over again. Smart people, hard-working people, disciplined savers, all undone by one simple mistake. They never shifted from accumulation mode to preservation mode. They never adjusted their strategy when time became limited. Now here's the part most financial advisors won't tell you. Protecting your money doesn't mean putting everything into cash or bonds. Cash loses value to inflation. Bonds can get crushed by rising rates. The solution is balance with intention. Kevin O'Leary talks about owning assets that produce reliable income while limiting downside risk. Income gives you control. Income gives you confidence. Income allows you to avoid selling assets at the wrong time. Dividend-paying stocks, structured income products, laddered bonds, and inflation-aware assets all play a role when used correctly. The goal is not maximum growth. The goal is sustainable cash flow and capital protection. That mindset shift is everything. Another mistake retirees make is trusting outdated advice. Many people are still following rules created decades ago, like the 4% rule, without questioning whether it still works in today's environment. Markets, inflation, longevity, and interest rates have all changed. Blindly following old formulas is dangerous. Kevin O'Leary has also warned about overconfidence in government support. Social Security was never meant to fully fund retirement. Medicare does not cover everything. Healthcare costs are rising faster than inflation. If your plan relies too heavily on external systems, you are exposed to political and economic risk you cannot control. This is why planning before 2026 matters so much. The next few years will likely be volatile. Debt levels are high. Global uncertainty is increasing. Markets don't move in straight lines. Retirees who prepare now will survive comfortably. Those who delay may be forced into painful decisions later. Let me tell you a quick story. A couple in their early 60s thought they were doing everything right. Solid savings, diversified portfolio, no major debts. When the market dipped, they ignored it. When it dipped again, they told themselves it would recover. Then inflation hit harder. Expenses rose. Withdrawals increased. Fear crept in. They sold part of their portfolio at a loss. 2 years later, they realized their retirement income had permanently dropped. Not because they were reckless, but because they didn't adapt in time. This is exactly what Kevin O'Leary is warning about. Retirement failure is rarely sudden. It is slow, silent, and preventable. If this message is resonating with you, take a second to like this video. It helps this channel reach more people who need to hear this. And if you haven't subscribed yet, do it now. Wealth Playbook exists to help you think clearly about money when emotions run high. The good news is, this mistake is fixable. Awareness is the first step. The second step is shifting your mindset from growth obsession to risk management. The third step is building a strategy that fits your age, lifestyle, and goals, not someone else's timeline. You don't need to predict the market. You don't need to chase trends. You need clarity, discipline, and a plan that works even when markets don't cooperate. Kevin O'Leary's message is not about fear. It's about responsibility. Responsibility to yourself, your spouse, and your future. As we move closer to 2026, the gap between prepared retirees and unprepared retirees will widen. One group will sleep well at night, the other will constantly worry about money. The difference won't be intelligence or effort. It will be strategy. Before you leave, I want you to think about this one question. If markets dropped 30% tomorrow, would your retirement plan survive without panic, forced selling, or lifestyle cuts? If the answer is no, then Kevin O'Leary's warning applies directly to you. Drop a comment below and tell me your biggest retirement concern right now. Is it market crashes, inflation, healthcare costs, or running out of money? Your comment helps this community learn from each other. And if you found this video helpful, share it with someone over 50 who needs to hear this message before it's too late. This is Wealth Playbook. Protect your capital, control your future. And I'll see you in the next video.